Yeah, they're in a very, very difficult place because obviously the gilt market we've seen over the last couple of weeks, leverage has been a big part to play in the volatility and the uncertainty. And so, even what you've been talking about this morning, the politics are still uncertain. What's happening next? In terms of gilt issuance going forward, we're still at the risk of energy prices, the energy market. We still don't quite know what the deficit's going to be over the next couple of months. So the Bank of England is still a very, very difficult place. But the biggest issue the Bank of England have got, and I'm still not sure they're 100% aware of this, is how sticky inflation might be. So I've seen very recently the labour market's very, very tight. Wages are running over 5% year on year. Headline inflation is obviously 10%. But I think more importantly for me is what we're looking at underlying inflation, so core inflation or services inflation, which is also running at nigh on 6% year on year. So these numbers are much, much larger than the 2% target the Bank of England are aiming for. So they're in a very, very difficult spot. I don't envy them at all.
John, you've given us a long laundry list of issues there, but just give us a sense as to whether you think we're through the worst of it now.
In terms of volatility, yes. Have we hit the yield highs in the UK? I'm not so sure about that, and that's just because of where inflation is and where inflation may settle in the future. But I think what we certainly have in terms of the kind of the big moves in yields, I think that kind of the intraday moves in yields, that is behind us. And the Bank of England now are aware of the problems. And also, even a couple of weeks ago when they stepped in, they were pretty quick. If I was a couple of days, they really stepped in. When they did step in, they stepped in hard. So that is impressive. And that is reassuring.
John, it's fascinating. The gilt market over the last week, it's been like a day trader's treat, hasn't it? And just looking at that bounce we had yesterday in prices, I was certainly talking to people who were getting excited about the idea that you might make a reasonably quick turn just playing the gilt price. What do you think happens from here on in? Do we see the volatility settle down? And ultimately, you've said you don't think yields have peaked yet. Where do you think they may peak?
Well, that's a good question because I mean it's a difficult thing to look at. But I'd say, I mean, I'm as an international investor, I'm looking relative to other countries as well, and gilt yields are still, I would say, lower than other countries similar kind of characteristics. So the gilt yields have got back to where US levels are, just shy of 4%. But overseas, we've got, I mean, obviously a smaller market, but New Zealand bonds kind of 4.5%. They announced very high inflation overnight as well. So you could easily see gilt yields edging back towards 4.5, even perhaps 5% until inflation is tackled. And that's the key thing. There will come a point when inflation does peak, interest rates are enough, and that's when we'll start seeing the big declines in yields, and that's when we'll get the big capital appreciation.